Hello friends, welcome to Hamsa Accounting. The first step to record business transaction is to correctly write journal entries using the rules for debit and credit. In this video, we will first learn the meaning of journal followed by getting familiar with the format of the journal. Then we will quickly revisit the rules for debit and credit before finally applying the same to record financial transactions of a business in a journal. Whenever a transaction takes place, a document or voucher in the form of a bill or a cash memo or an invoice is generated by the transacting parties. These documents are called source documents. From these source documents, an entry is made in the journal by following the rules of debit and credit. Hence, a journal is also referred as the book of original entry. As described in the previous screen, entries are first documented in a journal, which means journals are books of original entry. Another feature of a journal is that entries are recorded in chronological order. It means transaction that took place on day 1 would be recorded first, followed by transaction on day 2, day 3 and so on. Chronological means according to time. Every financial activity of a business enterprise affects two places at the same time, and both the aspects, that is debit and credit, are recorded simultaneously in every journal entry. Accountants term this system as double entry system. A brief explanation or narration detailing more information for a transaction is written after every journal entry. This is done so that all the related details of a particular business deal can be recalled easily at a later stage. Sometimes more than 2 entries are made in a single journal entry. Whenever that happens, it is said that a compound journal entry has been made. Before we make an actual journal entry, let us make ourselves comfortable with the format of a journal. A journal format for PQR enterprise is presented on your screen. As is evident from the illustration, a journal has a column each for date, particulars and ledger folio. There are 2 columns for entering the amount, one each for debit and credit. In this imaginary example, electrical equipment account is being debited. DR is the short form of debit. Cash account is being credited. The credited account is generally prefixed by the word to. CR is usually not written for credited transactions. The description at the bottom is termed as narration for this journal, which will help the business to find out the related details with regard to this entry. Now, let us quickly recall the steps that one needs to follow for recording financial transactions. Please watch the video on rule for debit and credit for a detailed explanation on the same. The first step is to identify the item of a business transaction and categorize them under asset, liability, capital, expense or income. Suppose a business entity paid rent to its landlord in cash. In this case, rent is an expense and cash is asset. The second step is to determine whether the transaction increased or decreased the item under consideration. In our example, payment of rent has increased the expense, whereas payment by cash decreased the balance of cash in hand, which is an asset. The final step is to apply the rule of debit and credit for the respective item. In the video of rule for debit and credit, it was explained that the 5 categories of accounts may either increase or decrease. Now, any increase in asset and expense is debited, but any decrease in these 2 items are credited. For liability, capital and income, any increase is credited, that is opposite to asset and expenses, and any decrease in these 3 categories of accounts is debited. To again refer to our example in the previous screen, payment of rent resulted in increase of expenses and therefore rent account will be debited. Payment by cash resulted in decrease of assets and hence cash account will be credited. We are now in a position to make entries in a journal. Let us take an example. Messrs. W&E Tours and Travels purchased 2 ceiling fans on 9th of April 2022 from RDS Electric Shop for Rs 8,400 by cash payment. Now, ceiling fans are assets for the business and on purchasing the same, asset in the form of ceiling fan has increased. On the other hand, cash is also an asset, and payment of cash resulted in the decrease in the balance of cash. Thus, one asset has increased while the other has decreased. We will debit the asset account which has increased. Since ceiling fan has increased, we can debit electrical equipment account because increase in asset is debited. On the other hand, we will credit the asset that has decreased. Since cash has decreased, we will credit cash account because decrease in asset is credited. Finally, we will write the related details in the bottom as narration. Let us consider one more example. Four Wheels Auto Agency obtained a Rs 90,000 loan from Samir on 15th of April 2022. The business has obtained a loan from Samir. So Samir is the creditor for this business and creditor is a liability. Obtaining the loan has increased the liability, and from the rule of debit and credit, we must credit any increase in liability. Therefore, Samir account is credited. The other side of the transaction is as follows. When the business received the loan, it received the same in the form of cash, which resulted in increase in the balance of cash. Cash is an asset and any increase in asset is debited. Hence, we will debit cash account. Finally, we will write the narration for the transaction. Let us discuss one last example. Tim started his stationery shop, Focus Stationeries, with Rs 1,75,000 from his own savings on 18th of September 2022. Here, the cash balance with the business, that is Focus Stationeries, has increased. We will debit cash account because cash is an asset and any increase in asset is debited. Remember, business unit and the businessman are different for the purpose of accounting. Here, as soon as Tim bought his own money to the business, it becomes the money of the business. The other part of the transaction is as follows. The money has been provided to the business by Tim, who is the owner of the business. Owner's contribution in the business is represented as capital, and any increase in capital in the business is credited. Hence, capital account is credited. I hope the matters related to journal entries are clear to a certain extent. For more such videos, stay connected with this channel, Hamsa Accounting. Thanks for watching. Please share and subscribe.